Good afternoon, traders, or good evening, traders. It's Bill Baruch with Blue Line Futures, and I wanted to give you what I'm looking at here ahead of the weekend in the energy market. Happy Friday, happy Memorial Weekend. Great close here in crude oil. We closed new swing highs, but we have not seen the July contract get out above this March 7th level. This is high 116.43, and I'll get to that 116.43 in a moment. But very bullish move here this week. Starting last week, we saw the Saudi Arabia oil minister Prince Abdulaziz bin Salman deflecting the White House calls for more production and really saying that they can't bring this production back online. I mean, essentially alluding to the lack of spare capacity. I think that's an extremely bullish narrative, something we've been talking about for months. We also heard from the Saudi Aramco CEO yesterday, talking about the lack of spare capacity as well. This is a very bullish narrative here right now, and 116.43, we get out above there. I think this is a breakout, and I think we'll run. Now, why 116.43 is important, even more so, is this is the continuous contract. So July is facing previous highs in continuous contracts. 115.56 is that high in May, but we have this 618 retracement, 116 area, and the March 24th high in that front month contract, then 116.64. So lines very closely. This current July contract, 116.43. I think we can break out of here, but that's what we got to look at. And still, obviously, there's some damage here to work through, but I think it's extremely bullish right now. I think the fundamentals are extremely bullish. And overall, they typically talk about seasonally crude oil energy likes to top out and into that Memorial Weekend. But I don't think this is a typical environment. I don't think it is at all. Look at what we're seeing here in gasoline. New swing highs here in gasoline really kind of played off this trend line, ripped higher. Again, new swing highs, but I also want to say, hey, look at this. Look for some resistance. Extrapolate here on this trend line resistance. We can run into that nice little ascending wedge. Now, you can make the argument ascending wedges can be bearish. I think fundamentally, if the fundamentals are bullish, ascending wedges can be bullish. It can build for a breakout. So one thing you really want to keep in mind, what would turn this ascending wedge to be potentially retest the bottom of the channel and then potentially give a bearish breakdown. Look at this front month gasoline. Again, continuous gasoline contract, this continuous chart of the front month contracts going back. You have previous highs, and we're running into that 390 area right now. We really need to get above here. This high, $4 was from the June expiring contract. So you don't want to see this turn into a head and shoulders pattern. But again, extremely constructive support. This is gearing for a breakout. And it's going to power crude, power that July contract out above here. And look at this, these individual energy stocks. Now, as you see Chevron breaking out, very constructive, higher lows breaking out. Yesterday, you had a little bit of a spinning top. Nice follow through here today. Great close. Exxon been just bleeding higher for days now. Really nice move there. I'll get back to Exxon in a second. Marathon Petroleum is a stock we own at Blue Line Capital, along with Chevron. Blue Line Capital is my wealth advisor. Bleeding higher here in Marathon Petroleum, extremely bullish. I mean, if you look back, this is a chart that it has broken out. This is some of my old lines I've had on here, but it's extremely bullish. It's broken out. Now this is a refining stock, and you see these crack spreads at record highs. You get this gasoline strength relative to crude oil. Very bullish on these refining stocks. Phillips 66 is one we own as well. We've had that more recently, and that's because we're also getting this breakout right now, pinged against the trend line, but there's still room to run here. I think with this breakout in Phillips 66, you get this nice big area here for it to run into. So I do like that. Similar, Exxon has not broken out from previous levels. Again, one of the things I like about TradingView is being able to see all of your old lines being drawn on there. So check this out. Exxon has some room to run. But Chevron has broken out. That's one of the reasons why we are much more bullish on Chevron and have been for quite a while. But going back to crude, these are all reasons why this coming week is going to be extremely important for crude oil coming up. We need to see this to follow through, and we cannot see a failure early in the week. Otherwise, we could see something like this get failed and something like this in the gasoline get failed. We need that strength here to continue. Have a great weekend. Good luck and good trading. This is Bill Baruch with Blue Line Futures. Check us out, bluelinefutures.com. Check us out on our YouTube, Blue Line Futures. And remember, futures trading involves substantial risk of loss and is not suitable for all investors.